So the VWAP Predator ASB Optimization Masterclass. So before we go on and work through a real scenario with an instrument, I just want to go through some relevant points that you need to understand. So average holding price. So with the VWAP Predator, we are scaling in and adding more contracts. This will affect your stop loss update. So I've got an example here where we have the stop loss update 2 that I want to talk about here, where we go through 45 ticks and we adjust it to 30. So the first thing is, this is our first entry here at this point, 68.28. Then we get another entry up here. So there's a difference between of 22 ticks from the first entry to the second entry. So halfway, our average holding price is 11 ticks. So this blue line here is where the 11 ticks is. So once we get that second entry here for that second contract, our average holding price is at this point, and this is where the intuitive part of the ASB comes in and actually says, when we get to 45 ticks, so when we get up here to 45 ticks, so again 11 ticks higher than the original entry, so that adjusts everything on the stop loss adjust now. So when we go through 45 ticks at this point here and it moves back, it's already adjusted the stop to the 30 ticks that we've talked about. So it's very, very important that when you're starting to optimize this, you understand that even though you've got a stop loss update to make it risk free at 20 ticks, for example, if you've not gone through 20 ticks, by the time you get to a second entry, your risk free price, we've got to go through the further 20 ticks. If, however, you've gone through those 20 ticks, you haven't gone, you've gone through those 20 ticks, it's gone to risk free, then you add another contract, it will not move backwards. So even if you've added another contract 2 or 3 ticks above that break even, if it comes back, it'll just take them all out. Okay, so hopefully that makes sense. It's very important to understand that average holding price. So the next thing is stop loss adjust in line with the VWAP extension. So what we have is the previous one that's closed. So when we have, so this is our entry at this point here. And remember, when we get the session closed and then reopen again, our VWAP and VWAP extensions are very close together. And we're going to look at another example on that in a little while. But once this, so at this point here, when we get into the trade, our stop is at the VWAP. We're one extension behind. So this is on the blue line. But once we actually cross above the next extension, this one becomes our stop here at this point, and it follows that here and there. So you still have your stop loss adjust to be more aggressive. Again, if you go through 20 ticks and adjust it to 5, they won't change. That can be more aggressive. But in reality, your main stop when you have the first trade is one extension behind. In this case, we hadn't broken that extension. This is where our initial stop is, where the blue line is. Once we break through there and close above, the stop gets adjusted up to this point here and just follows that extension. And again, this is an example where we get a little, another scaling in at this point, and then this one, it just doesn't go and it comes back and takes us out at that trailing stop position there. So again, it's very important to understand your maximum risk from the previous entry, and we're going to go through an example on that as well. And so that's where that second entry is, and both contracts are taken out at that point there. So when you're optimizing also, I think it's important to have a few things enabled that you wouldn't have when you're running live. It may slow it down a little bit. Remember, we're only optimizing though, we're not running it live. So I want you to be able to enable show swings by default, and then show the previous zones by default, because it's very important when we're actually doing a visual check on these trades and these signals. is to understand that behavior, and it's best to get all the information that you can, those previous zones which caused a trade not to be taken or where the profit was taken, and just to understand those swings as well, so you can try and understand the behavior a little bit more. So initial minimum max risk from previous VWAP extensions. So when we go through this, and we've gone through that first class where we talked about all of those different portions of the filters that we build in, this is an example where we get a buy signal. It's to the next one down is where we're going to place the stop. It's 74 ticks. So if that's more than your maximum risk, it will not take it. Okay, now the same chart I adjusted. Okay, this here we can see the maximum risk is 50. Now this one, it's the same chart, but I put maximum risk at 80, and you can see it took the trade because it's 74 ticks between the stop and the entry. But you can see it was a loser in the end. It already gained a lot of momentum, and this massive gap here, this is too much risk. So this maximum risk is very, very important to understand, and when we go through optimization, we'll try and get that level just right to get the best potential winning percentages and net profit. So the next one the VWAP extensions, again, you can see when we get that reopen, they're very close together here. So it's important you ensure you have that sensible minimum risk as well. Okay, so otherwise you're going to get tipped out of trades, because remember that if they're that close together, when we take in a trade at this point here, our VWAP is the stop. Okay, so it's very, very important. So that's our sell signal, one tick below. That is our stop at that point. That's 16 ticks. Okay, so if we had a minimum of 15, that would meet that criteria and the trade would be taken in. It's also very important to understand the minimum or the maximum, amount of bars for the next signal, and the maximum risk in ticks from the last entry as well. These two are very close together, so we can see the momentum's going here. So in this situation here, minimum risk is 10. We were 16, it took the trade. We have the next entry at this point here, okay, which is 11 ticks from the previous entry here. Okay, remember at this point we've got max bars set to 8. It's only 2 after that one, so that makes that criteria. And max ticks from last entry 50. Okay, and again, that's something that we're going to optimize to get the best sort of situation there. So I just wanted to really sort of hit home a little bit on some of the nuances with actually adding more contracts. So this is it's a strategy that allows us to add more contracts, but we need to be very aware of those extensions being very close when we reopen. So we need to make sure that we have a sensible minimum risk, so we're not getting tipped out all the time, and we have the maximum risk that we talked about earlier, and also those max bars from the last entry, the max ticks from the last entry, all very important to culminate them all together to get a really good strategy that's optimized. And again, here we can see that it exited on the Guardian Zones touch with those 2 contracts. So now we've gone through that little bit of extra theory from that first session. So now we're going to go to the charts, and we're going to do some optimizations. Again, these are good from when I recorded it. Obviously, if you're watching this 6 months after I've recorded it, these settings, whichever instrument I do, will not be the same, because optimizations change, because behaviors change. Okay, so let's crack on. I'm going to use gold as an example here. Now you'll see the time frame up there is Unirenco for 1220, but you're going to be. I'm going to go through a process now to look at the clusters of winners and losers, and this is the one that I'm going to end up on. But I'm going to show you a slide in a minute to show you why that has happened. But the first thing is to get some sort of general settings together first. So when we click on the strategy, we need to be sensible in what we're going to do. We're going to make sure it closes on session close. Historical trades are enabled because we need to see those. Going to start with the starting quantity of 1. Buffer is going to be very aggressive at 2. Okay, so any more than 2 ticks above that stop market and it will not take a trade. Entry expiration after 2 bars as well, so very aggressive. So we get a signal. If we're not in within 2 bars, we're out. The order gets cancelled. Entry offset is 1. Again, we can be aggressive because of our buffer technology. So minimum required heat map, I put 5 out of 6 as a starting point here. And I suggest you would do that. Don't go any less than 5. Minimum risk in ticks, 15. So I want to make sure it's at least 15 ticks before we think about putting an order on. Maximum risk is 50. And again, we've just been through that in that previous segment. Minimum guardian zone, risk to reward to the guardian zone is 161%. We're going to allow multiple entries. Maximum bars off the last entry is 6. This is a starting point. Max ticks from last entry 20. Again, reasonably aggressive with this, so we're not too far away from those original entry. Each time we add a new one, it's going to be 1 contract, a new contract, and then the maximum position side is 2. Okay, we can work up and make that larger depending on new count size. So exit parameters here, stop loss offset is 1, nice and tight, below the high, below the low of the signal candle or above the high of the signal candle for a short. Stop loss update. With this type of strategy, you need to be, on some of the slingshots we do 8-2, but with these, because of the type of trading it is, we need to give it a little bit more room. So 25.5 would be a good starting point. Stop loss update 2, 40, 25. Stop loss update 3, 60, 40. Total profit distance 100 ticks. So if it keeps going through all of those, it gets to 100 ticks, take the profit. So this is a starting point. Exit on guardian zones we've got checked, and we're going to show the VWAP predator again. We talked about that earlier, purely because we want to see that behavior around that VWAP and the extensions. We're in scalping setting. We've got the native, the 15 and the 30 minute enabled. And at the moment, I've just put a max profit of 2,500 a day. We're not going to put anything else in that P&L protection right now. Trading sessions mode is disabled. We just basically have a starting point for us to be able to collect some data. So once that's done, and you've got all of those settings, you're just going to click enable and click apply. So you're always going to have a starting point, and the first thing you're going to do with these starting points is go and change the time frame, the chart settings, to try and find a good cluster of winners and a low cluster of losers, so you can identify the best times of the day. So what I'm going to do is, when I right click and go to performance report here, see historical data, I'm going to bring that over. I'm going to click on, so it's net profit $35,000, profit factor 3. It's good already, okay? And some of the others on the 135, the 2610, the 3915, they were all pretty good as well. But the first thing I'm going to do is go to analysis, and then go to the right and go to entry time, change it to entry time, and then click half hour of the day. So we can see with this particular case, we've got very small clusters of losers and some really good long clusters of winners. And we can see on average, I would say we're around about $2,400 sort of profit. The biggest is $6,000. But what I want to show you is the difference. And this is the first point, of course, looking for those clusters. So this, I've already taken the screenshots just to save a bit of time. Unirenko 135. Everybody thinks we've got to have a fast time frame, we've got to scalp, got to get in and out, and we'll make more money. Actually, it's not the case. So 135, we can see there's some really sort of deep clusters of losers in there. We have got some decent clusters of winners here where the green is. 2610, we seem to stabilize some of those losers a little bit. 3915, again, we've got less clusters of losers here. But then when we go to 41220, we've got very minimal clusters of losers. We can optimize those out reasonably quickly. We can see when we look at maximum trade size, 3,200 on the 3915, 4,000 on the 2610, and we're around about 3,000 on Unirenko 135, 6,000 on 41220. Average is around 1,200 on 3915, and around about 1,600 on 2610. And as low as 1,200 sort of average winning price there. But on the Unirenko 41220, we're around 2,400, so we're pretty good. But the main thing is, for me, this is an obvious thing. When we look at those purples for the losing clusters, and we look at the greens for the winning clusters, what we're trying to do is get big clumps of time where there's winners, and when there's clusters of losers, they're not big for a start. But also it's not over a long period of time. So going through this process and enabling your chart, the strategy, and changing those chart settings, you will, for your instrument, you will find the right settings where you get that good cluster of winners and reduce those losers. So that's the first point of control, really. So we're going to go back to the summary, and we're going to right click that and export it to a spreadsheet. Okay, so this is our starting point. This is where we are. We may end up with less net profit, but one of the things we really want to concentrate on is this maximum drawdown here of 1,439. This is too much. We need to reduce that. We need to get the percentage profitable up. And I'd like to get the number of trades down, to be honest. We can look at average winning trade 227, average losing trade 170, so we're on the right side there. So max consec winners 14, max consec losers is 5. That's quite a lot, so we need to move that down. So that's our starting point. I'm going to move that off the screen. The next thing I want to do is I want to just have a visual look at some of these trades and see how they're behaving, see what's happening. So here we got one trade in, and it came, and we took it out. Let's just measure that move. What was that move to we get taken out at the? So that's 41 ticks. So that's our 40 stop loss update trigger. Okay. On this particular case. So we're doing a little bit of work here to understand. Ultimately, it did come down a little further. We can measure these. Actually, the pivot point there was 61. Okay, so if we alter that, for example, one little thing to say 65. Okay, to 40 or to 50, we would get a little further into the trade. But this is just one instance. We're just starting to understand that behavior, and that's one of the things we're going to be doing, is using that ruler and talking and just measuring some of these trades that happen. Let's move along a bit. Okay, so we have a couple of losers and then a winner. Okay, the losers, we can look at, okay, where is our stop for there. Let's measure that. So this is a signal candle here. Our stop, remember, is at that previous VWAP extension. The entry for the order would be 1 tick below the low, and that's 41 ticks. So we know there were losers at 41 ticks. Okay, it doesn't really matter about this second one. Remember, if we optimize this out and make the maximum risk 40 ticks, that trade would never have occurred. Okay, but we also need to measure those winners as well. So we can't just be carte blanche and start reducing that maximum risk. Otherwise, we'll get no trades. So let's measure this winner here. So we went from the VWAP, we're 1 tick above there. That's 39 ticks. So that would have been a winner. That would have been okay. If we reduce that max risk to 40, it needs to happen more than once though. Let's have a look at this previous trade that we looked at here. That is where the stop's going to be. That's where the entry is going to be. That's 47 ticks. So actually, by reducing it, would have missed this really big trade. So at this moment in time, from the observations I'm making, we got to be careful not to reduce that max risk too much. So there's another example of a trade here where we did move down. We've come back and take the stop out. So let's just measure where that is from the entry to there. So that's our 40 ticks. So that's the 40 ticks. So if we go back to strategies for a second and we look at the stop loss updates, we can see once it moves through 60, we adjust it to 40. Okay. So one thing you've got to think in your mind there, we actually gave a lot away there. What was the actual move? Move that down to there. That was 87 ticks. So all of a sudden now I'm thinking one of the things I'm going to do before I start to adjust those times of the day when we're going to be trading, I'm thinking the stop loss adjusts need to be moved a little bit. From that first instance we saw that we got out a little too early and we could adjust that second stop loss adjust. But then this stop loss adjust here, we could be 80-60, for example, instead of 60-40. And that's one of the things you're going to have to look at. So I've looked at 2 instances and, I'm going to be looking for more. But what I want to do now is I want to say that, okay, this is probably a little bit of a pattern here. So I'm going to change one thing at a time. The first thing I'm going to do is change the longer, the middle one, sorry. So I'm going to disable, go to that stop loss adjust here, and we said 40-25. So now what I'm going to do is probably go more like 60-40. So in reality what I'm doing is taking that one that I've started with and I'd make it a little better. Okay, I'm just going to then go to this one and go to 80-60 and let's click apply. Let it do its calculation. So you can see here we made more profit on this one. Let's just move back in time a little bit. No real difference there. Just want to go to this one and no real difference there. So let's have a look at the performance report. What we did it make it better or did it make it worse? Okay. So we were around about $35,000 profit there. This has gone down to 34. The max drawdown actually has remained the same. Okay, the win percentage is slightly less. So what we did made it slightly worse, because this is an example of actually seeing it happen once on a chart, trialing it, and actually saying over the 90-day period that we've got that set on. And again, this Unirenco 4 1220, if we look at the data series, we should also look always having 90 days. Okay, very, very important. So we're going to change that back. So we're going to go 60, 40, 40, 25, because overall that was better. So I've got a little bit away along the chart there, try and make some changes, and although it wasn't massively different, there was slightly less profit, slightly less win percentage. So we just needed to change that back. If we make a change and it doesn't work, so let's now move back in time a little bit and have a look at some more trades. Little winner, loser, little winner. Nothing really we can learn from that. And again, we've got little winners here. We've got 4 trades here all on the same day. This will start to come into effect where we're thinking about that max profit drawdown a little later. But for right now, I just want to go and find some more trades. Okay, good trade. Very good trade here. And worked very well because we closed up above this. See how we talked about it in that first part of the session there, where these extensions are very close together. So once this had gone out, this is where our trading stop is, on this extension here, and that's where it took it out. So all these vertical lines where the orders are. So if we just take off the signals, for example, you'll see it goes a little lighter. Those signals really are there for trades where we had the signal we didn't trade, so we can try and find out why. So here we had a sensible trade, really. It was a good trade. The stop loss adjust has worked very, very well. We don't want to give it too much, so we want to make sure we keep banking in those profits there. Okay, some small trades here. Little winner, little loser. See how close these extensions are. So this is an example where we get a market order instead of stop market order, and because we closed below this extension, because they're so close together, that now comes our stop loss, so it took us out. Nothing we can do about that, really, purely because, yes, it continued to move down, but we have a rule, and this is the difference, that how close these are when we first start there. It's not a bad time of the day to trade, because when they run, they really run. In this situation, we were just taken out. It wasn't a loser. Okay, so we had a losing trade at this point here. Can we learn anything from it? You know, it's the time of the day, so we're going to be doing that shortly. Just wanted to make sure that we got these stop loss adjusts right, and I think I have. We tried to go a different way. I mean, that was a break even, that was okay. We tried to go a different way, but in reality, we didn't make it any better. So those initial settings that I gave you were pretty good. So I'm thinking we're good on that. That was a good trade as well. Another good trade. See how we get you get a couple of trades a day in here, really good. So I'm good. So what I'm going to do is just go back to that performance report, and that analysis. I'm going to take a note of those times when we don't want it to trade, basically, and when we do. Now to analysis, entry time, half hour of the day. So I'm not really bothered about these. I'm going to go something like 8 p.m. all the way through to 2:30 a.m. We've got a small cluster here. Probably don't ignore that. So 3:30 a.m. again, half an hour after the London Open. That's always good. To 4:30. And then we're going to go 7:30 a.m. to 1 p.m. So I've got those 3 time slots, and to be honest, 3 is as much as we really need, maximum 5 I would say. So we're going to go back to strategies, disable, and then we're going to go all the way down to trading sessions mode. All days, and then we're going to do, we said 8 p.m. to 2:30 a.m. Change that there. Oops. 3:30 to 4:30 a.m. And then 7:30 a.m. to 1 p.m. Oops. Okay. So we've got those AMs and PMs right. We are good to go. And then let's fire it up and check our performance report against our standard one. Okay. So slightly more profit. We were at, let's bring those together, 35,097, we're at 35,838. The main thing that I've done at the moment is we've gone down from 1439 max drawdown to 753, so almost half that. We've increased the win rate from 69.5% to almost 74%. And again, what we've done is reduce the number of trades from 331 to 261. That's all. That's good. So for around about the same profit, if not a little bit more, we've got a lot less trades, a lot less risk on. The max drawdown is going the right way. So we're good where we are. Average losing trade 151, average winning trade 238. So that difference there is a lot better. We're looking good. Average trade 137 compared to 106. So everything we just did is going the right way. So the next thing is, this is my next one I'm going to export, because this is the one we've got to do some work on and compare it against. So I'm going to put that on the screen. I'm going to close that one, and then we're going to be looking at what we've got is the right times of the day. We've got the stop loss adjusts, good. So what I'm going to do on the strategy performance report now is, although those are winning clusters, okay, just want to check those on analysis, entry time, half hour of the day, we're still good. What I want to do now is look at the trades, okay, and again you can download this on the spreadsheet. What I'm looking for is the dates and how we sort of, so this date on the 20th, we're loser, 3 losers, okay? On the 21st, started a loser, and then we're 245, 275, 25, 21. There's a lot of winning trades at this point here. We didn't give away at the end of the day. So, one thing that's easier is to download this on the spreadsheet so you can figure out what the sort of, how we're going to put that trading max drawdown in, get those sort of average profits that we take during a day, so we don't want to give too much away once it gets to a certain point. We do have one winner loser here on the 22nd after some winners. That was almost $300, but then on the 22nd we pulled that back quite well. Again, we've got 25th, 74 minus, then 115. So we were net positive for that day. 26, we have two losers, a winner, a loser, a loser. Okay, so we can see in the days where we have just one loser, we're pretty good. But the days we have two, it continues not to be very good so far. So 26-2, we did pull back a little bit, but in reality, we could have done better. 27th, we had two losers, but then we got 395, 22, 395, 155. You know, we pulled that back considerably. So to have a max consecutive loss of 2 would have left a lot of profit on the table there. So we're talking about the P&L section now. We've got days where we have multiple winners, definitely, and some days we get quite a lot in there. So we're going to have a starting point, I think, where we have just sort of doing some mental arithmetic here on some of these days. I mean, some of these days are very big. Very big. What I don't want to do is, it's an English saying, cut my nose off to spite my face. I don't want to start being too aggressive with these, because I may have to accept that sort of drawdown if I'm going to get a good profitable strategy here. But I just want to sort of get the averages. So 23 here, 23rd of September, we're 290, and then we give almost all of that away, but we don't quite do that. So, you know, we could try something like a $300 or $350 max loss for the day, but I'm more inclined to start with, because I've got some really good clusters here. There's a 249 loser there on the 16th. I think that's just a one-hit wonder. 21st, we have minus 204, so we're 45 net after that. That's 280. Then with 395, so a 300 wouldn't have affected that. So again, what I'm going to do is I'm going to export that spreadsheet. This is something you should do, because what I've got there now is just all of that information. Because what I want to do is initially just make one change. Going to go to the P&L section. Max loss. Daily strategy loss amount. So if it tips through 300, I just stop trading for the day, okay? I don't want to give too much of that profit away. I want to see if it will reduce the max drawdown. Taking a little while to load up. Okay, by just adding that, we actually reduced the profit by 2,500. We didn't reduce the max drawdown. So this is where sometimes you've got to accept that there is going to be a drawdown. And remember, this can be a max position size of 2 contracts. So if you're trading this, you need at least $20,000 in your account for 2 contracts. So in reality, $753 max drawdown over a 90-day period is not bad. We've reduced the max consecutive losers to 4. Not brilliant, but that's where we are. So what I'm going to do is I'm just going to alter that because I still want a safety net there. So I'm going to put that at minus $400, because if we go out of whack totally with this data set, we don't want to be having massive losers, okay, or massive losing days. So what I want to do is get roughly where I am at 35,833 with that max loss for the day, because if the data set goes out of whack and we start to make bigger losses, I need to reduce those losses. I need that safety net, if you like. Okay, getting close. 34,331. We're still 1,500 out, so I'm going to do one more change and make it 500. This is my if all else fails, and we get a lot more losses in than this 90-day data set. I'm protected. Okay, a little bit more to go, so I'm probably going to be something like 600, almost close to my max drawdown, really. You can only make one change at a time and compare. It's a process, but once you've got that process right, starting from those winning and losing clusters all the way through to going through this process, you will have a good optimized strategy that it won't take long to keep re-optimizing. Okay. There we are. 35,833. We're back to where we were, but we've got that safety net in that doesn't affect this particular thing. So what we're going to do now is we're going to have a go at just having that max profit. One of the things that we'd look at is sort of, we started at 2,500. Let's just take that down to 2,000. And see if it makes a difference, really. Are we cutting things off? Are we happy with $2,000 on a day, on a session for profit? Is it going to affect the overall performance? And what it looks like on the bottom of the chart is a big dark blue line if that occurs during a day. I'm pretty close. I think $2,000 is probably exactly just that blue line there, so it'll stop trading for the rest of the day. So let's have a look at our performance report now. So we left a little bit on the table there. We were same win rate and everything like that. We just had left a little bit on the table, around about $500. So I think we were right. We were right at that 2,500. But what I want to do is go the opposite way. I want to go to 3,000 because we made slightly less profit by reducing that max profit. So what I want to do now is change that to 3,000. Okay, so now we're back at 35833 with no real change. Okay, so I think we were right at 2,500. It's one of those starting points that I know is reasonably good. So we're going to, before we do anything else, we're going to change that back to 2,500. So what we have to consider now is the trailing max drawdown. So again, you can do a lot more work with that spreadsheet that you downloaded for all of the trades. So daily strategy profit amount. So if it goes above 1,500, we don't want to give too much away. So we're at 2,500 here, which is about right. So we could start at 2,000 if it goes over 2,000. But I'm just going quite low on 1,500. And I would say no more than 20% of that, so minus 300. So if we go above 1,500, even if the profit keeps going higher, it will always trail at minus 300. So if it dips that back down, it will take the profit. So it's a starting point. And again, this is a process now to figure out where we need that max trailing drawdown, if we need one. Not every strategy needs one. I think depending on your outlook, whether you're a funded trader, whether you're trading your own money, that sort of thing, that trailing max drawdown is going to be the right thing or not. So we've got the max loss. We've also got a good maximum profit. So what we need to do now is, by adjusting that, we actually see more profit. Okay, so we could say, and again, there's a more scientific way of this, of looking at every single day, chunking and seeing how those profits accumulate. Well, we can see we've gone from 35,833 to 36,784, but we've reduced also the max drawdown from 753 to 674. Okay. We still at 17 for our 17 max consent winners, 4 max consent losers. But what we're doing here is increasing the total net profit by having that max trailing drawdown, and we have that max drawdown reducing even further, which is really good. We can actually see the short trades are the ones with the biggest drawdown. So if you just wanted to take less risk, and just enable long trades, you'd see you've got a very small drawdown here for a rather large profit. 80% win rate on there, whereas only 68% win rate on the shorts. So you could, that's still 125 trades in 90 days. So that's more than one a day. It's an average of 2.11 trades a day, and only going long at this point on gold would reduce your risk again. And that's a simple fact of going into strategies and disabling the shorts there. Load it back up. So there's lots of options to reduce that max drawdown. Yes, you're going to make less money, but you're going to have less risk at the same time. And that really depends on your personal risk appetite. If you're prepared to withstand those drawdowns for those potential higher profits, then that's the way you're going to trade. Now we look at that strategy performance. We're just long trades. We've reduced it a little bit on the max drawdown. We're 22 max consent winners and only 3 max consent losers. It's pretty good. That's not the way I trade, but that's an option you can do. So let's just go back to strategies a minute. We're going to re-enable shorts. And then what I want to do is just play around with this, these figures here. So if we activate it at 1750, for example, instead of 1500, and then obviously we're going to go say 350 on here. So if it comes back 350, we'll take the profit Does that make it better or worse? We're 36.7 with a 670 something drawdown. Again, you should really right click and export all of those spreadsheets for those performance reports. Doesn't really make a great deal of difference actually, going up to 1750 with the 350 max drawdown. It still bothers the shorts there. So once we get those winning days, they just keep going. And I think, the idea then is, I'm not going to continue to go through this, but you're going to make those small adjustments in reality to try and reduce that max drawdown if you can. But once you've done that and you've got a good, for me this is a good strategy right now. The thing to do then is right click on the strategies and save it. So you go to template down the bottom, save, and I use this particular way. So I'm using GC as the instrument. VWAP version 1.0 I'm using at the moment, and I'm on a uni 4/12/20 with max 2 contracts. Okay, I'm saving that, and that's now a template file. Okay, always save things that you do. Now what I want to do is just briefly show you that actually changing that to max 3, and I'll do this in a separate video, really it can change things for the worse if you don't optimize all of the other things like the max bars from last entry, max ticks from last entry. So 36,650 was the total net profit with a max drawdown of $674. So it was pretty good. Obviously now I've gone to a max position size of 3. Okay, so it's not a matter of just changing that one thing, because it's going to affect a lot of other things, because all of a sudden now you're introducing a third contract, and that can increase a lot of risk. So when we look at the strategy performance report now, it's actually worse, 34,007 from 36,650. I just wanted to show you this because the starting point is max 2, but when you start to go max 3, and I'll do that in a separate video, is you are introducing a lot more risk. The max drawdown's gone up, and so it's a whole new optimization, because you've got to consider and look through all of those trades on that 90-day period to figure out where your maximum bars from last entry would be beneficial. What's your maximum risk from last entry? Because remember, because you've got 2 contracts, the third contract, that maximum risk is from that previous entry, not the first entry, the second entry, and so on and so forth. So there's a lot to remember. Hopefully that helps. I'm going to be doing a lot more of these optimization videos for the VWAP Predator ASB.